Hello there, Mavericks. This is Imri, and welcome to today's currency recap. It is Thursday, July 20th. Okay, there was a fair bit that happened today, and it makes for an overall fascinating market picture. So let's get right into it. So we're going to be reviewing the trading day. We're going to be going over some of the meaningful news that's come out. We're going to be taking a look at the broader equity market, and we might even hover over commodities for a little bit as well. And then in terms of current market analysis, we'll be looking at the major indices. We're going to be taking a look at some of the custom currency baskets that we track, and we're going to see if there's any major news happening tomorrow. Spoiler alert, there isn't. It is a rare Friday where there is no news whatsoever projected to come out. And then finally, as always, we're going to be taking a look through some cryptocurrency setups and some Forex setups as well. So in this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill of every profitable currency trader. At Maverick Currencies, we're currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits generated. If you are a technical trader with a technical-based trading system, we want to meet you. So click the application link in the description below this video. Let's break down today's market action. So first up, we've got some broader market analysis. In terms of market performance, we're going to be taking a look, of course, at equities, crypto, a couple commodities, and fiat currencies as well. But first, let's take a look at the news of the day. So the Dow is higher. Last time I checked, it was up by roughly 100 points, which isn't a big move in the Dow, but it's a minor update nonetheless. However, the NASDAQ and the S&P both drifted off. What's caused the slide in the NASDAQ has a lot to do with what's happened with Netflix, where investors are hoping for a little bit more clarity in terms of what future revenues holds for that company. Over in crypto land, cryptos are holding steady, and in fiat currencies, the dollar has rebounded today. So taking a look at the broader market first, we had down day in the S&P, which naturally translates to a down day in the total world stock index, VT. Crypto, I mean, yes, technically a down day, but percentage one direction or the other isn't saying a lot for a market as volatile as crypto. Gold, also down on the day, but holding steady overall, and oil slightly up on the day. So a pretty muted day overall in trading. I'd say what's notable is that stocks have broken a winning streak here, so we'll have to see whether or not we can find support and rebound, or if we are due for a larger correction. We're going to talk about that in a little bit. But next up, we've got fiat currencies. So right away, my eye goes to the Aussie dollar, which had some news overnight and ended the day fairly strong, gave back a lot of its gains, especially relative to the US dollar, but is still holding up more or less. The US dollar performed really well today off the back of some unemployment news that came out early this morning. The yen more or less flat, and then the Swissy, euro, the pound, and the New Zealand dollar all struggled today, with the Swissy being the biggest loser on a relative basis. In terms of cryptocurrencies, Litecoin holding its head above water, Ethereum more or less flat on the day, and also similar story there with Bitcoin and Bitcoin Cash. I believe that cryptos, I mean, we saw this massive move up in a lot of cryptocurrencies after the results of the SEC hearing, or the judicial hearing between the SEC and Ripple was settled. And it's natural that after such a large move, we're seeing a lot of these major market cap cryptos take a bit of a breather. Now, in terms of our market outlook, we're still staying with a +3 here despite today's losing day in the S&P 500. We're holding above both moving averages, and the slope of the 20 and 50 period moving averages is still pointed to the upside. So taking a look at this chart of the S&P 500, there's a couple things that jump out to me. Number one is you'll notice that yesterday we hit the top of this parallel channel. The tops of parallel channels have historically done a great job at capping market rallies. We'll have to see if that's the case here as well. Now you'll notice that we're still trading a fair bit away from the 20 and 50 period moving averages, as well as the relative strength index, giving us not just overbought conditions, but also bearish divergence going back to the first peak in the RSI closer towards the beginning of July. So all this tells me that there might be a little bit more of a skid to come here in stocks. There's probably a lot of weak bulls that bought near the very top here that need to get flushed out, some profit taking as well before we can start further marching higher. In terms of news, like I said, nothing really going on tomorrow, which is going to make for some very interesting trading conditions. All right, now in terms of currency analysis. Okay, so as we take a look at volatility here, we've got the Canadian dollar and the US dollar in the +2 column, the Aussies in the +1, the yen smack dab in the middle, and then we have the pound and the Swissy. The pound at -1 and the Swissy, the euro, and the Kiwi at -2. I like looking at the US dollar, the Aussie dollar, the Canadian dollar, and taking a look at pairing any of those currencies against the Swissy, the euro, and the pound, and potentially even the Kiwi. So lots of potential currency pairings to look at. We're going to dive through those baskets right now. Okay, so first up we've got the yen. Now, I'm just going to go back to what I was talking about with the yen previously, was that we had reached just such a historic extreme in terms of how weak the yen had gotten, and then we traded, and then we started to trade a little bit higher. But what's interesting, if I highlight this region right here, this is former support, and the market's now treating it as resistance. Of course, this begs the question, if the market's treating this as resistance, can the yen slide even further? Certainly not outside the realm of possibility, but if we take a closer look at the price action on a 4-hour chart, I would say that we're probably looking for a little bit higher in the yen first before we get any kind of continued weakness. So that puts us in quite a bit of a conundrum as far as the yen is concerned, because there's no doubt that the downtrend is still intact. We haven't really broken a significant swing point. We'd really have to start getting above where we were trading at the end of May in the yen, which is quite a ways away from where we are right now, before I would consider a potential change in trend in terms of where the yen is concerned. So all that's to say is that although I think the yen, I think this looks pretty bullish here. If I throw up our moving averages and the 20 and 50, you can see that prices are just trading sideways. They're kind of consolidating here after a strong push higher. Now, corrections often take three-wave shapes. So we still need a third push higher, most likely in the yen, before this counter trend correction is finished, and we can look for any further downside. That means that I'm personally going to be leaving the yen alone, because as a trend trader, I don't really want to trade counter trend. So even though I do see some potential upside here, I'm going to have to ignore that and wait for that upside to finish, and then see if there's another trend continuation set up to the downside in the yen. So I'm personally leaving the yen alone, but I just wanted to give you some parameters in terms of what I'm looking for. Next up is the US dollar. So keep in mind what I said about trend channels earlier when I was referencing the S&P. We've also hit the top of a trend channel here, and we've done so not quite hitting overbought conditions on the 4-hour chart, but in the 1-hour chart we certainly have. There isn't really a strong sign of a reversal here yet. You know, we've got one solid push down, but we didn't even take out the swing point here in the dollar basket. So at minimum, I would say we have to get below where we were on the 20th of July. So, that's earlier today. We have to get below where we were earlier today around 11 a.m. or so Eastern time before I'd consider looking at a stronger dollar reversal. So that puts me fairly neutral on the dollar, just because if we take a look at some context here, we had this larger push down, and we broke below the 20 and 50 period moving averages. So all that's to say that I want to be a seller of dollars, but I need evidence to suggest that this pullback has ended first. And you can see we're trading quite a bit above the 20 and 50 period moving averages on the 1-hour chart. So I'm inclined to let the moving averages catch up to price and then start looking for signs of a potential bearish continuation in the dollar. Okay, the Swissy. I talked about how I really wasn't interested in the Swissy because I didn't think there was that much upside to play for. And look at this bearish engulfing candle. So that was last week. I wanted to draw your attention to this historic resistance level going back to January 2015. And if I'm right and we're going to reject this level pretty hard, then we're looking at a world of Swiss franc weakness over a significant period of time. Too early to say because the Swissy's been in one impressive uptrend for quite some time, pretty much since we put in a significant bottom in April 2021, I would say. So, you know, I mean, are we going to give back some of that move? Yeah, undoubtedly, but I just don't see a setup yet. I really want this market to trade lower for at least a few days in a row, get a nice controlled pullback, and that's when I'll be looking to short the Swiss franc. Okay, the euro. Last week I was in no man's land on the euro. We were trading somewhere around here. Today, you know, well, we might have put in a double top. We have signs of bearish divergence here in the relative strength index, and that tells me that, yeah, potentially we might have a few days of euro weakness here. It's not a short that I love just because this chart pattern to me is not very clear. I can draw this trend line, and if we break this trend line, then it could be looking lower, but I think the downside is potentially limited. We could be just going back to where we were on July 6th, which is just down to 132.70 in this basket. My secondary target would be where we were closer to June 7th, which would be around 131. The pound is where things get interesting, right? This is where I really like the idea of looking for further downside in the pound. So look at this multi-year resistance level that I called out going back to 2018. I've been talking about this resistance level for a few weeks now, and it's a doozy of a resistance level. I really would have been shocked if we just broke and clean through it. So as you can see, we found support off of this trend line, the supporting trend line. I would really like to see the market break decisively below this trend line, get a nice controlled pullback, and that's when I'll be looking to hammer the pound. Otherwise, I'm going to stay out and just keep a close eye on it and watch. Okay, the Canadian dollar is really exciting because we were tracking the breakout of this inverse head and shoulders bottom. We hit the target of that inverse head and shoulders bottom almost to the tick, and then we sold off viciously, and we bounced in where we had this prior area of congestion before, basically a period from December 2022 to May 2023 or so, and we found support. Now what's interesting is how we found support. As an Elliott wave trader, I'm looking for 5s and 3s. What does that mean? It means that 5-wave movements point me in the direction of the larger trend, whereas 3-wave movements tend to be counter trend. Well, I can count a very clear 5-wave advance off of the lows from last week when the market opened on July 16th. So that tells me that we're probably going to get a bit of a pullback in the Canadian dollar, and then I'll be looking for reasons to be a buyer of the loonie, not a seller. Aussie dollar. Well, we had this strong move up. We had a fairly strong move down where we gave up a lot of those gains, and then today we broke the swing point. So breaking that swing point is significant to me. I think that's a pretty big deal. I think it means that I'm inclined again to give the Aussie the benefit of the doubt here and look for reasons to be a buyer, especially so long as we hold above both moving averages. And then it's a slightly different story here in the New Zealand dollar, which looks a little bit more bearish. So my eye is drawn to this impressive decline here, followed by what is a very choppy, albeit lengthy, bull pullback. So how I would look at this structure is very simple. We're in a parallel channel, and if we break below the lower boundary of this parallel channel, I'm going to start looking for reasons to be short the Kiwi dollar. It's a very similar setup to, it's not quite a parallel channel, but we were in this triangle formation in the US dollar basket instead. See what happened after we broke below. We had a nice drop, followed by a pullback. I'll be looking for another drop. Very similar playbook to what I'm looking for in the New Zealand dollar. And that sums up the currency analysis and the possible trade setups that I'm hunting. So in conclusion, we do have some choppy currency markets right now. As always, just be sure to play relative strength and weakness. And as always, make sure you're paying attention to proper position sizing. All right, that's it for me, traders, for today. I look forward to seeing you next week. Take care, everybody. Bye for now.